Welcome to another live stream. My name is Hans. Remember, I'm simply dude on the internet, and I'm not a financial advisor. Thank you for tuning in today's live stream. Remember, crypto is dangerous, right? Please, guys, play from a position of strength. You only need to survive until 2025. There's still a lot of time left in the cycle. I want to wish everybody happy holidays, Merry Christmas, and Happy New Year's pretty soon. So in today's video, we are going to be checking out the Bitcoin dominance, some of the fib levels on the previous cycles to see what we might be expecting for this cycle and when we can see an altcoin season finally happen. Many think that the altcoin season is already underway, but if we look at the Bitcoin dominance chart, frankly, the season hasn't even really started just yet. So subscribe to the YouTube, and for those watching on Twitter, please follow. I'd appreciate that very much. Who am I? Why am I doing this? So we've been pretty spot on this cycle. Some videos to go look at from my side is this amazing chart show when Bitcoin and Ethereum tops and bottoms are in. This, in fact, I actually called the bottom and the timing on that bottom pretty perfectly, just looking at different time frames and the time analysis. So we've been pretty accurate. We checked out the Ikimoku cloud on Bitcoin. We were in the cloud. This was pretty much very, very early at the 20K region areas. We were looking at some altcoins. Some of them have already popped off, those which I play on Binance, although generally I do invest in DeFi just for the fundamentals of security, privacy. I believe that the vast amount of my coins should be in cold storage off exchanges. We've seen in the past how the exchanges and centralized parties, third parties, continue to be bad actors in this space and continue to steal people's money. With that intro out of the way, this is where we look at macro cycles. We throw in a bit of the property cycle. We also check out PulseChain and Hex, and also macro, including our Bitcoin dominances, the dollar strength, the S&P, and the Dow Jones as well. But for today's video, we are going to be doing some basic technical analysis on the Bitcoin dominance chart, just to see where we might be in the cycle. So in the 2018 cycle, Bitcoin, or the 2017 cycle, this was, you could say, the ICO craze. And this is where BTC lost a lot of its dominance. And from there's been thousands of coins, even millions of coins created daily. There are new coins on your EVM chains and Solana, etc. So there's going to be more coins coming on the market. This reduces the dominance that Bitcoin has in the market. So from 2017 to when Bitcoin dominance finally bottomed, so this was a massive alt season that happened here. Remember, when this chart goes down, the altcoins do well and Bitcoin tends to suffer some of its dominance. Although Bitcoin does not tend to go down in value, it loses dominance when it trends sideways above the 200 moving average. Not always, but it's a generally good rule to follow. We can see here the only important lines on this chart is the golden ratio, which is the 61.8 fib level. This is a very powerful level, as some of you have known if you watch my channel and any competent fib analysis. The 78.6 level is another important level, although we will see that this really hasn't come into play thus for the Bitcoin dominance chart. So if we extend this line to the right, we can see that the 61.8 continues to be a very, very powerful level for the dominance. It found resistance at this level almost absolutely perfectly. If we zoom in here, it literally touched it and reversed. And then the double top on this Bitcoin dominance happened in December of 2020. I remember this very, very well. In fact, the altcoins bottomed exactly in the new year of 2021. And this is where you will hear Ethereum is dead because Ethereum is not moving. This is where you will hear that the altcoins have finally died from the Bitcoin maxis. And generally, this is when they're wrong and that the price reverses. So they are a very good indicator for when the altcoin season should start. Once again, the 61.8 and then finally acted as major resistance and the top in Bitcoin dominance. And from there, we went into the altcoin season and eventually the bear market. This new cycle has now started, so we can ignore the previous cycle and we can zoom in over here. And if we do that same fib analysis from the region or the cycle that we are currently in, we can see that the 61.8, which acted as a very, very strong resistance and at the top in the previous cycle, comes in at 60%, slap bang on 60% to the area over here. So we might expect this cycle to go up here if everything stays the same. Generally, we should think that markets do repeat, continues to repeat, and we should stay away from saying that this time is different, right? So into the 61.8 would be a good area to find resistance. This is the weekly time frame, and if we go to the monthly, nothing has changed on the fib levels. It doesn't matter which time frame you look at these cycles or on the fib analysis tool. But what is valid is some of our indicators, and I like using the RSI as it's a powerful indicator and not to get too complicated for newcomers, so it's family or beginner friendly. We can see here now that the price from here is going lower. A strong trend. Even if we go to the 60%, it will still be lower from there. The reason why I do this is because on indicators you try to look for divergences, differences between the chart and the indicator. So if you can look at this chart and tell me, what do you see here? You see that this line is going down, yet the line on the indicator, or you can call this momentum, you can call it the RSI or the indicator, is going higher, right? You can see with my dotted line there that this is horizontal, yet this line is going higher. This is what we call bearish divergence. The opposite can happen at the bottoms if the price is lower, yet the indicator is higher, which we did have down here. And if we draw that in, we can see that prices were going lower, yet our indicators were going higher. That is bullish divergences, the opposite of bearish divergences, and this was your indication to tell you, right, BTC is ready to assert itself, and from there we've had a nice rally. It does look mild on the monthly scale, but either way, it's been a powerful move. Bitcoin has asserted itself against the altcoins, and you can see this against the BTC and the BTC versus the altcoin pairs, where the altcoin pairs only now have bottomed versus BTC. And if we quickly look at one on Link, this is the weekly time, the monthly time frame. Obviously, we'll go down to the weekly. We only really bottomed on Link versus BTC in June. Now, this is a more powerful chart, as Link has been one of the better performing ones. But if we look, for example, at something like ADA versus BTC, this also has just recently bottomed, and it's kind of bottomed off a V bottom, although this is kind of a double bottom, to be fair. This still needs to come down a little bit more, as we can see that some of this momentum indicators are already very, very high versus BTC. So all through this area, BTC has asserted itself and gained dominance. So if we go back to BTC dominance, we can see that there are some bearish indicators on the larger time frames, including the weekly or the monthly. This is the weekly now, and we have that same thing going on here. Price is higher, yet our indicator is lower. And this has now been confirmed because it's made a new low. Still very high on the RSI. On the weekly, it has a lot more room to move to the downside. It's a little bit confusing here because I would like BTC to pull back to the 30k area to retest at the breakout levels. But when BTC dumps hard, generally the altcoins tend to dump harder, so BTC dominance will go up. Yet these charts are telling us that BTC dominance wants to go down, giving the altcoins a little bit more room to run. So this might mean that BTC moves sideways here into the new year. Maybe we get the ETF announcement, and only then do we get a quick dump to the downside. And generally after the halving, you also tend to get a nice pullback in altcoins and in Bitcoin as well. So we have to continue watching this to see where what is going to happen here. If we do a retracement from the highs to the lows, we can see that the dominance tends to fall below the 78.6 level. This carries over to, let's say that we do bottom here. Where can we see this go down to? So there's pretty much what I'm trying to say is there is a lot of room to move down from here. Maybe we only move it down a little bit more, rally all the way to 60, and then start our real altcoin cycle, which might be by the end of or middle 2025 to September 2025. That is where the large altcoin season tends to happen. So maybe in the short term we do have a little bit of a pullback, giving the altcoins a little bit time to go, and then we move higher. So what we would do then is we would adjust the fib tool to the 60%, and then we will have our new targets for where Bitcoin dominance might be falling to. This is very good for the altcoins. Or another scenario is that the top is in here for the Bitcoin dominance and the altcoin season starts. The narrative for that could be that the market is getting smarter, knowing that the Bitcoin has diminishing gains, and that it might have a 3x if you're really lucky, maybe a 2x, 2x conservatively to 80k for the top in BTC. I don't think it's healthy looking for crazy targets like 200, 500k and $1 million. I think that's absolutely ridiculous. Maybe in 10 years time, but not this cycle. Shout out to everybody in the chat. Soldier, Zero Oak, Zenite, Thoth. I do not know if I'm seeing the chat in. Let me check it out. I'm pretty sure I am getting my chats from Twitter. If someone on Twitter would like to type me a message, so let me see if I can see you guys on Twitter as well. With that dominance out of the way, we know where we should be looking for a top at the 60% area. We know where we should be looking out for the altcoins bottoming. It's a long way down. And we've seen in the past where BTC dominance likes to top out. We've seen that we have bearish divergences on the larger time frames, including the weekly and the monthly chart, which is macro. And then on the shorter time frames over here, the RSI is getting low here, right? But this is a breakdown level on the daily. We have now bounced off this level. What we need to see is we need to see this break lower, below this line at 51.70 to expect more downside. Although there aren't no bullish divergences yet, we sometimes need bullish divergences for the price to reverse. That we do not have just yet. So what we would like to see for a breakdown is we would like to see this break down below the 51.7 area, retested, and go lower. I don't know how much further lower we can go on the daily. It is getting into some oversold areas, but definitely more room to the downside. As soon as we start seeing bullish divergences on the daily, we can expect some relief for the altcoins to rally a little bit or go down a little bit and BTC gain some dominance. Let's cover some of our macro things. You guys know that I've been saying that the recession is not in play yet. We would not have the property crash that everybody is looking out for. This cycle tends to only top, or is expected to top, in 2026. So there's a very, very explosive phase to happen. And yeah, that carries over to pretty much everything, including Bitcoin. If we look at the BTC price over here, we can see some worrying signs on the daily, right? But it's nothing to really panic about. These are bearish divergences as price is going lower, yet the indicators are going higher. Pretty much value has left this asset, unfortunately. If we do that very, very simple fib retracement tool from our lows, our previous lows to our highs, we can see that this is where value is at. The 61.8 to the 78.6 level is what is called the reload zone. This is where value is at, right? Any area below this is where value is at. An investor will then look for a double bottom or higher lows and a higher high. And we've already had that back in 2015, although the market really didn't give you a really good chance to get in. It was a small double bottom, or what I would like to call a W. And as soon as the higher high broke, it just went, right? We really didn't come back to retest these areas. Unfortunately, value has left BTC. This is not where value is at. This is where everybody that has been left behind now needs to go look for more riskier assets that are still cheap and still in the reload zone, and there are many of them. And in fact, the more aggressive the retracement has been, the pullback, the more opportunity to the upside is, because these fib levels like to get hit on the return, yet it doesn't have to go to the all-time highs, but these fib levels like to get hit. The 61.8, the very powerful level, is at 48,000. Many people think that we might be getting into this area, but my only concern is that too many people are looking at this 48,000 area. And when everybody is looking at a certain level, it never gets hit. So either way, we might just stop here, or we go higher all the way to 50K. A professional, this is a trade here. Some people will blindly trade the 61.8 and the 78.6 level, and it would look something like this. They will enter their trade at 48,000. That is the long position. Look for the short position. They will enter their trade there. They will have their stop loss at the 78.6 level. Now, trading is exceptionally dangerous. If you're going to be trading, you need to put your emotions on the sideline, and you need to trade with your plan, only entering when all of your requirements are met. And then you need to put your stop loss in first before taking any trade, right? So there's a trade over there. I know Da Vinci Jeremy is also looking at this trade, and a few other people are looking at it. And you'll ride it down all the way to the 30K area. Coincidentally, this is the same area where I would like the market come down to and to retest. Just because many technical traders won't accept a breakout level until it has been retested at least once. So a retest from this area getting retested at the 31K. This is in fact still very, very healthy for a market to retest at these levels. We would not like BTC just to go through here, crash all these levels all the way to 80K before the halvening, because that would tell us that the cycle might in fact be over early before even getting into 2025. So let's build a good base. Let's move sideways here. Let's retest breakout levels, and we can do a sustainable bull run. But I still think that not anything has changed yet. The cycles are in a trend, and we haven't seen a change of that trend yet. So BTC looking good here, moving sideways, very high on the RSI, unfortunately for the bulls. But either way, the value has left this. Investors have to look for more riskier assets. Coinbase is a good chart to look at to get an overall view of what the crypto market is all about. This is still the largest company for crypto, and this is where people go to buy and get exposed to crypto for the first time. So this is where retail plays, and we can look for euphoria in this chart. This is the weekly scale, and the RSI is very high. Although there is no bearish divergences formed here, I think this can probably go a little bit higher, but it's risky here. We don't have enough data to look for golden zones or retracements. So Coinbase still looks good on the weekly, where maybe we will have to see a reversal in this before a reversal in Bitcoin. Dow Jones Industrial is at an all-time high. So this is the highest the price has ever been. It has now closed the candle here. This is the new candle. Uno momento. Excuse me, I had a sneeze. So Thoth asks, which is the best chart for to use for alts? Total 2, Total 3, or others? Could you run a fib and show the tops for the altcoins at the peak of the bull run? Yeah, sure. We'll get to the total dominance charts. I'm going to go through the macro charts quickly. So very bullish. Show me a high and I'll show you a buy. This is all-time high. So this is price discovery, right? There's no resistance levels above here. We just need to see where the market would like to take us. We can do fib extensions to see where this market might be going. Your 1.618, which is generally your first target. Let's just put a 1 in there so we can see where the first target is. This has already been hit. Then we can look at the 2 extension. This is called the parking garage, and that is at 37,000 or 38,000 to round it off. A little bit higher. It's quite hard to know when these things might be topping out. You might look for divergences on the charts, which we don't have thus yet. It would look something like this. You have the indicators going lower, yet our prices are higher yet. That is bearish divergences, and it called the top for you. So this RSI hasn't started moving down yet. It still has room to the upside, it seems. But it is high, pretty high here on the RSI. Next, let's go to the dollar. Dollar continues to weaken. This has hit a very bearish fib level, because this is called the dump chaser zone. So this is where someone, if they've missed the initial move of the dump, they will pull up their fib and they'll take a short here, and it actually played out perfectly as we've hit the dump chaser zone, and now we are selling off. ETH BTC needs to hold this area, right? This is bullish divergences on the weekly. So this is ETH versus BTC. This is another good indicator to look out for on the altcoins. There is also hidden bullish divergences here, as the price is higher, yet the indicators are lower. Lots of bullish signs here. Although the ratio between BTC and ETH for a swing investor, for a long-term investor, is down here once again between the 61.8 and the 78.6 level. We haven't gotten there yet. ETH is showing a lot of strength this cycle. In the previous cycle, it did in fact come all the way down to its reload zones, right? It even came below the 61.8. But this cycle, People have been waiting patiently for this to happen, yet we haven't even gotten to the 0.618 thus far, right? So this is very bullish. Unfortunately, a swing investor or a long-term investor can't really chase it up here. This is called the nosebleed section, a little bit lower. But value for this is here. Dare I say that it doesn't look like Ethereum wants to get to its reload zone. There are bullish signs down here. There are fundamentally bullish signs, as lots of people are losing faith in Ethereum, as Solana has run, Link has run, many altcoins have run, but Ethereum really hasn't done much, although it's up from $800 all the way to $2,000. So not only that, Ethereum bottomed before BTC did. And we can do that, look at that by putting up BTC over it. And we can see that BTC bottomed in the 14th of November, yet Ethereum bottomed June of 2020. To plot in a horizontal line, we can see that that was the low. This is a change of trend. Many altcoins do not bottom before BTC does. So this just shows the strength that Ethereum has. Not only that, versus the ETH BTC pairing, it really hasn't even done a 61% retracement from its highs. This doesn't mean this area has to get hit, although it is powerful. It doesn't have to get hit. If it does reverse here and goes higher to set all-time highs, that would be very, very powerful for Ethereum, as it has held its value versus BTC very strongly compared to other altcoins and compared to previous of its own cycles. To look at the price chart for Ethereum, we had this beautiful accumulation range, these higher lows formed, and then a higher high. Although this was a higher high, the market didn't close above the higher high. You need to see a candle close above it for it to be confirmed. We now have that, right? This is called in Wyckoff theory a sign of strength. As you break through the accumulation zone, you tend to move sideways here at testing the buyers to see if they're going to defend this breakout level and to see if there are liquidity here. If there is liquidity here. The RSI is pretty high, but we can see how really high Ethereum likes to get on this chart. Ethereum also had bearish divergences signaling to you that the top was in. We can see here that the price went higher, yet our indicators went lower. Not only once, but twice. Double bearish divergences, and that is what you try to look out for to see euphoria in the market, as it has taken a lot to push the price up there, but the momentum is lagging. And down you go, you start your bear market. This is now the accumulation phase. It's pretty much confirmed that the bottom is in here, as we have now broken out and we are fighting to show some strength here to move higher. Ethereum looks good. GBTC, BTC trading on market, on the stock market. There's some news going on there. They are trying to convert this to an ETF. They want this to also be backed by cash. And the other ETFs seems to be going the same way, which is concerning. We would like BTC to be redeemable for BTC and not redeemable for cash. Otherwise, you're simply trading cash and you're not really exposed to BTC. The reason why you want to be able to redeem your ETF in BTC, the underlying asset, is because that removes supply from the market, and charts are pretty much just supply and demand, right? The more supply is taken off the market, the higher the price can move. Okay, gold is very bullish here, guys. This has been as we know, a very, very long, from 2020, we've been moving sideways at these highs. It's been retested once, twice, 3 times, 4 times, for being retested now for the 5th time. It got rejected aggressively as soon as this market closes above this 2075 area, it's going to be pretty explosive, because once again, show me a high and I'll show you a buy, right? This will be price discovery. There's no resistance above these levels. Gold looks good. The Nasdaq, all-time highs, right? Very bullish, guys. Everybody's been looking for a recession. It has not happened yet. There is bearish divergences forming here. We are in all-time highs. Let's look at the previous time we actually topped. If we can see here on the RSI was oversold all the way back here. And if we ignore that cycle, because that looks like we had a little bit of correction here, and we go back here, once again, we can see the RSI very high, yet the price continued to go higher while the indicators went lower, right? So there's a massive bearish divergence. Not only that, this is the weekly scale. We can see how long this lasts, right? You guys can put your requests in the chat. I'll go through all of them if there are any. Yeah, so this can stay oversold above these areas for a very long time. In fact, it can form bearish divergences for literally a year before it reverses. So I won't put too much emphasis on these bearish divergences. That's only now formed. It hasn't been confirmed with us yet. It has a lot more time to go before it's confirmed. So let's go to our total market cap. This is a total everything. Looks good. It has broken out. It has formed its bottom. It's got higher lows. This is good market structure. We can see how long these things stay oversold. All the way from there. Let's just get the price. All the way from down here, it stays oversold and finally peaks with bearish divergences, and your bear market starts. What I'm trying to say is these things can stay oversold with bearish divergences for a very, very long time. Total 2. This is the total market cap excluding BTC and stablecoins. Very good. Let me plot in this. So this has the same market structure as Ethereum, as this bottomed in June as well. In fact, it is bottomed before Ethereum did. This is very, very good market structure. As these lows have been defended, you had your high here. In fact, this goes all the way back here, to be fair. As this was your high created, it found a resistance at this level and finally broke through. You can see how it found a support at these levels, confirming it as a breakout level and as support. This is called your sign of strength in Wyckoff theory. This is only the start of the breakout, right? If we go back to previous cycles, we can see the breakout level here, right? This means if we get our arrow tool, we are here. We are in this area here. And if I just move it sideways, it looks exactly the same, right? This is your breakout level. This is your sign of strength. This is only this. Let's say this is the end of the accumulation phase, the start of the cycle getting exciting. The start of the cycle is back here, right? This is when the bull market starts. The bull market starts when the bottom is in, not when the train has left the station, right? But this is still a valid area for some investors to go long. Many swing traders wait for a confirmation of the breakout to only go long, because they don't like catching a falling knife. It's pretty hard knowing when the bottom is in, but this is your confirmation that the bottom is in as soon as you break above your breakout level and start closing. And look how beautifully that is, right? Looks the exact same. Let's see how oversold we were on these areas. Let's just, so yeah, pretty overbought, excuse me, not oversold, overbought. Now, overbought and oversold is kind of a meme, right? But just to keep it simple, I'll continue saying it as that. So yeah, if we look at here, this is the RSI is in the exact same place. Not only that, it's actually lower than when we were back here. This just tells us there's much more room. Even though we are this exuberant and high on the RSI, it still has more room to move to the upside, and it has a lot more time. You can see how long it is before we actually even hit the bottom. So these indicators can be deceiving sometimes, but just keep that in mind. So that's the total market cap excluding BTC and stablecoins. So Ethereum is a large part of that one. Total 3 is the total market cap excluding BTC, Ethereum, and stablecoins. Now we can see this bottomed later, where Ethereum and total 2 bottomed back here. This is our breakout level. We've had our sign of strength, and it's moved higher. We can see that this chart looks the most powerful after total market cap, which includes BTC, which is understandable because BTC tends to lead the market significantly. But these altcoins are looking quite powerful as they've shown their sign of strength. They've confirmed this as support, and it's moving higher even now. On the RSI, it's starting to get green here, a little bit high. But if we go back here and we do the same analysis as the previous chart, that's your sign of strength here. And our sign of strength is pretty much at the same area as where we are currently at. So just to summarize that, it has more room, even though it's quite high here, to move higher. It hasn't even formed any bearish divergences yet. It tends to get really, really high on these indicators. To draw in the bearish divergences that we had on the last cycle, we'll just do that all the way to the peak and just pull it up on the price as well. Price going higher, double bearish divergences, and down we go. Chart reading is actually very easy if you look at it like that. Others is the total market cap excluding stable coins and the top 10. So these are your shit coins. I keep getting surprised at this, as this is another very, very powerful chart. The narrative here, which we can conclude, is that maybe people are finally recognizing that you need to be diversified into altcoins to catch those crazy crypto gains that we had in previous cycles, as Bitcoin has diminishing returns and we are the gains aren't in BTC anymore. There's still a 2x 100% move in the stock market is still very good. Can you take a peek at the chart of Wham for me, please? I am heavily invested in it. I'll try and look at it. Is Wham trading on centralized exchanges or on a DEX? You just have to tell me where I need to look at. So I'll just pull up DEX Screener for now. The RSI is off the charts. It is pretty high, but it tells us that it definitely can go a little bit higher. So to answer that's hard to say. Thought's question is, which is the best chart to use for alts? Total 2, Total 3, or others? Could you run fibs on to find the tops for the altcoins at the peak of the bull run? So your first resistance levels would obviously be your golden ratio, which is your 61.8 and your 78.6 level. But obviously we do expect these levels to get defeated, right? As the all-time highs in the past have been defeated, right? And if we can pull up our fibs here on the previous cycle to see what it did from the top to our lows. Your real resistance levels is the 61.8 and the 78.6 level. We can see that this market ignored those prices, and maybe it found a little bit of resistance here. It found resistance once, got rejected violently, and just blasted through it, right? Maybe we see that same thing happening again. We have our this is the reload zone in reverse. This is where professionals would take their short position, as I've shown you on the BTC chart just now. Maybe we find resistance here once and blast through, the same as the previous cycle. But then we can look at our extension levels, and we can see on the previous cycle it is drawn in here already. We have our 2.618. Maybe we can put in, let's just ignore the 1.618. And let's extend these lines. We can see some confluence here. We can see some resistance levels. It acted as support, and then the first peak actually happened at the 4.669. These are called fib extensions, and it gave you the first peak beautifully. How a trader will handle this, or an investor, is he will sell a small position at each of these levels, right? It never got to the next target. But your fib levels, your extensions, are the only ones that really give you a forward-looking price prediction. We can then do the same on this level, and we should expect diminishing returns. So from our lows to our highs, and if we zoom up a bit, we can see our extension levels here. Our first target would be the 1.618. And this is at 750 billion. Now keep in mind that this is the others. This is the more lower cap altcoins. And we can do the same study on the other altcoins. So your first resistance levels is the 330 billion and the 400 billion. Then your extension levels, once you reach your all-time highs, is your 750 billion and the 2.618 at 1.177 trillion. It's very hard to call bottoms, but an investor can use these fib tools to take out small percentages of his portfolio when these get hit. Maybe 10%, maybe 20%, maybe 50%, but that is where the investor has its own plan. He has, he knows his risk, etc., etc., right? That's not something I can tell you where the top might be. These lines tend to have lots of confluence, lots of touches as resistance and support. It can even blast through these levels, but these are good areas for profit taking, right? Percentage profit taking. It obviously depends on which altcoins you are investing in. If you're investing in the top altcoins like Solana, ETH, and Link, you would look at the total market cap 2, excuse me. So let's just quickly do a fib extension on that one, just for fun, to see where these targets are. This is a very, very good chart, as it has held these lows. It bottomed early and it's held its lows beautifully. So your first resistance levels on total 2 is the 1.2 trillion and the 1.4. This is before the all-time high gets hit. If you defeat the all-time highs, your first target, which is the golden ratio 1.618, is at 2.5 trillion US dollars, and then after that 3.77 trillion dollars. Once again, how an investor would handle this is he will take certain percentages profits off his altcoins at these levels, if that is in his plan. And then you've got crazy targets here, but we're expecting diminishing returns, so I don't think these higher levels will get hit, especially if they haven't been hit in previous cycles, right? It would be crazy to expect them to get hit if we didn't even hit the 4.669 in the previous cycle. So the 2.618 got you like a really good price target, but it wasn't at the top, right? The 4.669 never got hit. So maybe the investor took a little bit here, a little bit profits here, and then when the bearish divergences was confirmed, which was the area over here, so the bearish divergence was confirmed at this area here. Let me just get it at the exact same spot. So yeah, that would have been a good exit right there, as that is where the bearish divergences were confirmed. So there's many different ways to look at these things, and I'll be here throughout the cycle to chat about these things. It doesn't mean I'm going to get it 100% right. Is awesome indicator a good indicator? I have no idea what you're talking about, Stilly Jones. Can you take a peek at Wham? Okay, let's see if I've covered most of the important things. So the dollar is weak, right? When the dollar is weak, this is good for Forex, for Euro, for the Great British Pound, for the ZAR, for the yen, etc. This on the macro scale, this might even come all the way down to 93. This is very good for risk assets, crypto assets, Forex, etc. Right? This is good stimulus for us to go higher. The only index that macro index that hasn't hit an all-time high yet is the S&P. Now, the reason why we look at the stock market and traditional market is that when these prices get expensive, the investor that has missed these prices need to go for something else, a little bit more risky, but that hasn't left the station just yet. If they want to stay in the stock market, they'll go to the Russell. The Russell is your small cap coins, and this has now broken out beautifully out of its accumulation zone. We can see how it has defended these lows. This was a little bit of a stop chase, because everybody that longed to the market back here that put in this bottom had their stop losses below this price, and they took this market and literally just stopped these people out. If they have moved their stop losses higher, generally they'll have it a little bit lower below this line to compensate for moves like this. But we can see that a beautiful accumulation range, a lot like our total market cap coins or total market cap indexes. It looks a lot like that. That's what I'm trying to say. Not really high on the RSI just yet. This has now broken out, confirming this bottom. This is your sign of strength on Wyckoff. And this market wants to move higher as risk is starting to move to lower caps, right? And we'll see this move into crypto and everything else as well. Oil, while oil goes down, it's instant stimulus because transport gets cheaper, products being built and made gets cheaper. Everything needs to be transported on ships and trucks. The cheaper this gets, the better it is for us in the investing game. The last one we'll look out for is the Home Builders ETF. This shows us that the people that are building property is making insane profits. These are all-time highs. The property crash is not here yet, and this chart shows us that as these people are making insane gains. Can you look at GBTC since Barry and the other dudes resigned yesterday from the board? Yeah, so I said that there is some FUD going on there. It seems like GBTC has been captured. They were playing dirty in the previous cycle with Alameda and I can't remember the investing or the company that went out of business that were arbitraging this and lending from GBTC. Maybe the US government took over this and is trying to clean this up before the ETFs gets announced. And it seems like this will be converted to an ETF from an OTC. Remember, the in quotation marks, the backing is BTC. So this company won't be affected by bad news because the company is not the underlying asset being traded, but BTC is. So I still think the same as BTC, I want these levels to be retested. There is bearish divergences on the weekly scale on GBTC. It has been confirmed also. So it looks like a local top here, if I can give my quick analysis on that. Okay, I think we've covered pretty much the macro and what the effect might be. So, Soldier, you said you wanted to take a look at Wham. I have no idea if it's a stock, if it's a crypto, where to look at it, if it's on PulseChain, if it's on Ethereum, if it's trading on something else. You need to give me a clarification on that, please, dude. There was a question if the PulseChain bottom is in. Let's do that same analysis that we've seen on the other coins, right? Or the other indices, etc., etc. What you need to see is we need to see market structure, right? We need to look for bullish divergences. And we need to look for location. We are in location. We're pretty much trading at the lows of the launch price, which is very, very normal. You get your rally, you get your retracement. We then need to look for higher lows. Let's plot them on the chart. You've got one there, you've got a higher low there, you've got a higher low there, and we've recently made new higher lows. Not only that, we can look for a W on the chart, which is your double bottom, and a double bottom or a W is confirmed once it makes a new higher high. That's your high there, and these were new highs being created there. This is good market structure, right? We've got the RSI nice and low, although we can't see if we had bullish divergences because we don't have enough data, unfortunately. Another where I'd be comfortable to confirm that the bottom is in for PulseChain once we break above, because this is a large W, right? So, and for market structure to be confirmed, we need to set a higher high. Although we've had that on the shorter time frame down here, it's even retested it. This is your sign of strength, right? That we've talked about with all the other charts. You've confirmed your breakout level as support twice and confirmed it now. This is a very bullish candlestick that is called a doji candlestick. Just like the doji up here marked the top, this doji here could have marked the support and the lows here. This chart looks really, really good. I love the structure that we have here. And if you, this will practically be confirmed at 7,815. Okay, this has been an hour. If you guys want me to take a look at your altcoins, like your very low cap altcoins, while I'm looking at BTC and all of the other coins, consider a super chat. Wham is a crypto gaming token, my friend. They're AI generated. It's on Binance Smart Chain. Okay, so that was the right one. Either way, I'm not going to be looking at that right now for you. I like to keep these coins at 50 minutes. And it's already at 56 minutes. With that being said, thank you guys for watching this video. I hope you learned something. I just want you guys to always play from a position of strength. That means waiting for your retracement levels. You're 61% down from the tops. Just measure it with right. Wait for 60% down. You can do that with your fib tool from the lows to the highs. Let me remove the other ones. This is your position of strength. This is where long-term traders wait for their positions. It's sometimes very hard to be patient and to be disciplined, but this is not a market not something to play with, in fact, at all. You need to be professional, you need to be patient, you need to be strict with yourself. This is your position of strength. And please don't get wrecked. There's still a few years left of the cycle. The cycle is only getting exciting and quick now. So play from a position of strength. Please don't get wrecked. Don't leverage trade. You're not late. There's still a lot of opportunity there. With that being said, thank you for watching. Do check out the links in the description down below. My Patreon, if you like this work and you would like to see more of it and you would like to support my work, I'd really appreciate that. And I'll see you guys in the next video. Thanks for all you do. Thanks for the super chat. And I'll finish your seeing as you are leaving a chat over there, let me get, oh, the chart is already up here. I pulled it up. So to finish this quickly, hopefully you haven't bought the top here. This is a V bottom. This coin is very, very cheap. The granny is licking her chops here, but this rallied off a V bottom. To be fair, you have a double bottom here, right? This is your first double. It came down to retest that double. It has now popped off. So this is the first thing a granny needs to look out for, right? She needs to wait for market structure. Firstly, she needs to look for location. So this is your location, right? This is down. Was down more than 90%, right? So you have got location. You've got market structure, which is a very complicated way of saying not a double bottom, right? Or a W. If we put on the line chart, we can see the W here. Although it's not a pretty W, this is a confirmed W. Let me draw in my W and pop off. So this is now the market telling you that we can be interested in this coin, but we cannot be interested up here. This is now rallied, telling the market it's ready to maybe go higher. You can see the indicators are quite high. So what do we do now? We go ahead and choose our fib tool. We pull it up from our highs to the lows, and this is where value is at. We can already see that Wham has found support on these levels, right? It just shows the power of these levels. And to zoom in here, we can see how it has beautifully retested the 61.8, right? This is the golden ratio. You will always have a reaction at this level. It's bounced off there already. Now, if you've not have this coin yet, you need to wait for the reload zone, right? It's bounced off it already once, giving you a chance. Maybe it gives you more chances on the weekly. It still has room to the downside. On the daily, at 50%, it hasn't created a W yet. Maybe it gives you another chance to get in on this coin. But this looks good, right? This coin has been depressed significantly. It does need a little bit more room to the downside. But that's going to give people a chance to get in here. You had strong bearish divergences telling you that it was time to get concerned here. But this is just its initial run, right? This is going to come down and consolidate for a while. Wherever it finds its support, it's going to move sideways, and then it's going to have its day eventually. This chart has been down like this is where value investors get very, very, very interested. So some people look at this and see the opportunity is nowhere. A granny investor, a professional, looks at this and says the opportunity is now here. The bears are looking at this, and the people that buy tops are saying opportunity is nowhere to be seen. But me personally, opportunity is now here. This looks great. It just needs to go a little bit lower on the daily chart for me to get interested in this. Won't be surprised if this breakout level here gets retested. That would still be very, very healthy. This is called your sign of strength. You create a W and off you go. This chart looks good. It has most likely confirmed its bottom here. If it hasn't, you want these areas to hold. I mean, which is a 10x away. So this is not where you should be chasing this. This has some time to consolidate and move higher. So yeah, shout out to Soldier USAF for the super chat. I really appreciate it. So yeah, there is your Wham. First time I've heard about this trades against BUSD. You can also look at Wham versus BNB, and I can't seem to find it here. Let's look and see if we can find it here. Unfortunately not. Either way, I think the USD value analysis is pretty good and has a lot of value there. Just to round that off, the opportunity is now here on the shorter time frame. Maybe wait for a little bit more of a pullback, but it seems like you're already invested in it. Hopefully you didn't buy the top here, but either way, if you did buy the top, you're going to have to be patient here and this has lots of room to the upside. I mean, your first retracement level, let's put on the 38.2, is a ways away. This looks a lot like what the gains could be on Hex. I mean, just from where we are currently at to your first retracement level is a 4x, an easy 4x. Very cheap. These are the altcoins that we look out for. This is where we should be interested in it. Maybe a little bit lower on the daily, but this is where value is at. It has a lot of room to the upside, even to its first retracement levels. To its 50% and its 38.2 is an 8x. To its golden ratio is a 13x, etc., etc. So this is where we look for these altcoins that are very cheap, and even to their, you don't even have to go to the all-time highs to experience some insane gains here. Okay, shout out to everybody for watching. Thank you for being here, and I'll see you guys in the next video. Cheers for now, and bye-bye.